All right, let's get right to it. If your junk removal business is crushing it, we're talking over 300 grand a year in revenue, then this is for you. We're going to talk about how to stop leaving money on the table for Uncle Sam and start putting that cash right back where it belongs. $30,000. Just think about that number for a second. What could that get you? A brand new dump trailer? A massive marketing campaign? Maybe that extra truck you've been eyeing? Well, for a lot of successful junk removal owners, that's the amount they are literally overpaying in taxes every single year. So, I've got to ask, are you okay with that? Are you just going to let that 30 grand walk out the door every year? Because I'm telling you, with a few simple, totally legal tweaks to how you run things, you can claw that money right back. Let's dig in. Okay, first things first, let's talk about the heart and soul of your operation, your truck. Because hiding in plain sight is one of the biggest tax advantages in our entire industry, and it's something your average run-of-the-mill accountant might totally miss. Check this out. It's kind of crazy how much a vehicle's weight matters to the IRS. You see, if you've got a lighter vehicle like a standard van, you get these tiny little write-offs that are spread out over years. But if you get a heavy-duty truck, you unlock this absolute beast of a deduction called Section 179. It lets you write off a huge chunk of the vehicle's cost in the very first year you own. And this chart just says it all, doesn't it? Look at the difference. We're talking about a $65,000 truck. By choosing the heavy-duty option, you could see an immediate tax savings of over 20 grand. That's not a small adjustment. That's a game changer. Your truck isn't just a truck, it's a massive financial tool. So what's the secret password here? It's these four letters. GVWR, Gross Vehicle Weight Rating. That's the magic number you're looking for on the sticker inside the driver's side door. The key is that it has to be over 6,000 pounds. So next time you're shopping for a workhorse like an F-250 or a Ram 2500, that GVWR is the very first spec you look for. All right, that was the truck. Huge savings there. Now for strategy number 2. This one tackles what is probably the single most painful tax for any profitable small business owner out there, the dreaded self-employment tax. So if you're operating as a sole proprietor or standard LLC right now, you need to lean in for this. Here's the deal. That 15.3% you see, you're paying that on every single dollar of profit your business makes. So let's do the math. Your business clears $300,000 in profit. You're instantly forking over more than $45,000, and that's before you even pay a dime of federal or state income tax. It's an absolute killer. But watch this. This is where the magic happens. You switch your business to be taxed as an S-corp. The business still makes the same $300K, but now you pay yourself a reasonable salary. Let's just say it's $100,000. Here's the kicker. Only that salary gets hit with the 15.3% tax. The other $200,000? That comes to you as a distribution with no self-employment tax. And boom, you just put over 30 grand back in your pocket. Same business, same profit, just a much smarter structure. Now, a really important heads up, and this comes straight from the IRS. You can't game the system and pay yourself a salary of like $1. It has to be reasonable. So a good rule of thumb is to think, what would I have to pay someone else to do my job? That's the ballpark. Getting this right is absolutely key to keeping everything legit and staying off the IRS's radar. Okay, you ready for a lightning round? Let's talk about 3 quick wins. These are deductions that are super specific to the junk removal world, and honestly, they're so easy to miss, but man, do they add up fast. First up, your dump fees. Stop treating these like random little expenses. They're a direct cost of goods sold, and you need to track every single one. Second, marketing. You know those Google local service ads that make your phone ring? 100% deductible. Don't miss that. And finally, your home office. Even if it's just a dedicated corner in your house where you do your dispatch and admin work, you can claim it. The IRS has a simplified method that makes it a total no-brainer. Okay, let's pull back and look at the big picture for a second. Saving thousands on taxes every year is awesome, but this is about something even bigger. It's about turning your business into a real, valuable asset that somebody would want to buy one day. Let me give you some tough love here. When it comes time to sell, a potential buyer isn't buying you a job. They're buying a money-making machine. And if your books are a mess and the whole operation would fall apart if you took a 2-week vacation, well, the value of your business gets absolutely crushed. So here's how you fix that. You take that extra 30 grand you're now saving from smart tax planning and you reinvest it into building a better machine. You get rock-solid accounting software. You create standard operating procedures, basically a playbook, so the business can run without you. That's how you build an asset that someone will write a huge check for.
Whew. Okay, I know that was a ton of information. You're probably thinking, great, but what do I do right now? Let's make it super simple.
Here are your next 3 moves. Step 1. After this, go outside, open your truck door, and find that GVWR sticker. Just see what it says. Step 2. Pick up your phone and schedule a call with your accountant. Ask them this exact question. Should we look into making an S-Corp election? And step 3. Get an app on your phone right now and start taking pictures of every single dump fee receipt. No more shoeboxes full of paper. And I'll leave you with this final thought. This isn't just about saving 30 grand this year. The real question is, what could an extra $30,000 reinvest